Honestly, the relationship, the long-term relationship. It's not a one and done.
Hey guys, Leigh Saunders with C21 Soren Associates in the Angel Oak studio, talking to April Jones of April Jones Insurance here in Wilmington, North Carolina. April, why'd you get into insurance?
Well, honestly, I fell into it. It wasn't something I dreamt of when I was little. But honestly, I was in a graduate program. I was getting my master's in human resources, and I met someone, and they told me about insurance. And in all honesty, it seemed like a good opportunity, and I just ran with it.
Yeah.
And I never looked back.
And what's your favorite thing about being an agent?
The relationship, honestly. It's not a one and done sale. You kind of grow with the customer. You see them as they grow in their seasons of life.
Having you as my agent and working with you with clients, it's not surprising at all that you have an HR background. You're articulate, you're concerned about the client needs, and very knowledgeable about the process. So for me as a customer and for my other clients that use you, thanks for that. I appreciate it. That's awesome. All right. So how does my credit score? I want to talk to you a little bit about insurance rates and how you guys come up to those, what those policy costs are. How does my credit score affect my insurance rate?
Oh, great question. It depends on the carrier, in all honesty. We definitely have carriers that are not credit-based, and then we have other carriers that are heavily credit-based. So the better your credit is, the lower your rate's going to be. And the reason for that is they look at you as less of a risk. If your credit's bad, or you're not financially responsible, then they're going to look at you more as that you're a risk. You're going to be more likely to file claims.
So they're probably interpreting that my good credit means that I know how to take care of myself, I know how to take care of my home, and I'm going to put my home in a position to where there could be a loss that I could have prevented.
Yes.
Sound about right?
Right. You're going to take care of your home. And not only that, but you're less likely to file claims because you understand the repercussions of doing that. You have more in reserves, so you're not going to file every single little nickel and dime claim.
That makes a lot of sense. I'm not using the claim for maintenance on the home instead of having a plan for maintenance. That makes a lot of sense. All right. The next question I want to ask you is, how does residential versus rental or investment property insurance differ? I know that we spoke about this briefly, about how your limits want to be a little different when you're renting a property. So talk to me about, if I have an investment property, what kind of insurance variants do I need to be aware of?
Well, occupancy pretty much changes the form that we'd even write the policy on.
Okay.
So, and it depends on the carrier. Nothing's black and white. But if you have a second home that you have less than 26 rental weeks on it, then oftentimes we can still put it on your standard HO3 form.
Okay.
But if it's true investment, then we need to put it in a tenant occupied home form. So with that said, a lot of the coverages are a tad different. The rates are going to be different. But occupancy is always one of the first questions that we ask when we're quoting.
Right, so if I have a tenant occupying a property, my rates are going to be a little bit higher because I need better coverage because I'm more liable?
Sometimes the rate is less because they don't have as many coverages. It might be a named peril policy rather than an open perils policy. So it all depends on how the house qualifies, the amount of rental exposure that it has.
Right.
It's just definitely have to talk about what the occupancy is and how it's used.
And just a real quick snippet, guys, we're talking anecdotal. Everyone's unique, every situation's unique, so none of this is a specific opinion, but a general overview, right? So take it as you wish. Call us for specific questions. Right, so here's what I want to talk about a little bit next is deductible versus rate. So I'm an advocate of insurance. I tend to be overinsured, and I tend to run my deductibles a little bit higher in an effort to save on the rate. What are how do I make a decision? How would someone else make a decision as to whether they want to have a higher deductible, which they would pay at an event, in order to drive a lower rate? Talk to me about that for a second.
I, too, am an advocate for higher deductibles, but that's for my personal situation.
Right.
I think it all depends on how much you have in reserves and how much it's going to pain you to pay it. So essentially, either you're going to pay it in premium or you're going to pay it in a deductible. If it's a higher value home, typically we'll do $5,000, $10,000 wind deductibles. because the person has more in reserves and they're willing to save on the front end for premiums, and they know the value of filing a claim. So if it's up to a certain amount, they're willing to pay that claim rather than putting a ding on their clue report and having
Right.
it affect them adversely later. So I've never filed a claim on my homeowner's insurance. So for me, if you've owned a home for 15 to 20 years, the premiums that you've saved far outweigh the $2,500 I may have saved on a deductible.
Right, right. Okay, so if I'm understanding you correctly, it's kind of almost like your own financial discipline. Is it?
Right.
Am I going to have a plan to save $100 a month in the event of an event?
Right.
Would a $5,000 bill today crush me?
Right, exactly.
That's a decision
key.
to make for your own.
And a lot of first-time home buyers, that would crush
That
you.
would
right.
put you in
so
a
they
pickle.
want a $1,000
Yeah.
deductible because they're not going to be able to replace the roof or make up the discrepancy of that. But you just have to look at your own finances and see where you want to save.
Right,
and
right.
see what works for your family. But
So if I'm hearing you correctly, and this might be something to talk about on another topic, is that the more liquid you are, the more savings you have, the less liabilities, and what I mean by that is the less credit or debt to income you have, you may want to consider increasing your deductibles, reducing your rate or your premium because you do have a B plan. The insurance company isn't your B plan. You have your own
Exactly.
B plan and you save money by that. That makes a ton of sense. That makes me want to double check my stuff too.
Mm-hmm.
Again, for specific feedback, call April Jones Insurance. All right, here's a great question that I was really interested about, might be my favorite. What can I do to reduce my premium rate or the likeliness of a claim? And I think we've already touched this a couple times, but go ahead.
Well, there's a lot of different ways, but one is deductibles. That's probably the easiest way to reduce your rates.
Right.
But there's also other endorsements. There's reviewing your policy every year. That's
Yeah.
a huge one. You have inflation guards on your coverage A, which means every year your coverage A goes up. So a lot of times if you've had the policy in force for 10 years, it's time to kind of reel back and look and say, okay, has it really kept up with that much of inflation so we can reduce your coverages? As we're a brokerage, so we have numerous carriers to shop from. The best way is to look at your rate. If it's gone up significantly, just ask us and we'll be happy to reshop it. We're pretty proactive, so we will reshop your policy. If we see more than a 20% increase, we'll actually call the customer and just review their situation and go ahead and reshop it for them on the front end.
So it sounds like at April Jones Insurance that you guys don't only, sign you up for a policy and collect your premium, but also every year it sounds like you're almost looking at every file to see if there's an
Yes.
opportunity to reduce the liability and kind of reduce the expenses of the
Right,
client.
we'll run reports, the
Yeah.
renewal reports, and look for the increases that are significant and address it on the front end. Again, it's all about the relationship, and we want to keep you in house.
Yeah.
And what better way to do that than kind
Yeah.
of resist the.
And I know for me, there's a lot of, anytime I change providers, I automatically expect that if I had an A+ provider and then I go somewhere else maybe, and I don't do this really, somebody maybe goes somewhere else to get a provider so they can save a couple $100. It's challenging because I don't know policy speak
Right.
to say, am I really getting apples for apples?
Mm-hmm.
Am I getting 1 pound of apples for $1 or 1 pound of oranges for $1.50? So I think that you really need an agent that you can trust, and I trust you, of course, that can help you translate that.
Right.
I think that's critical because I know a lot about real estate, but when I read my policy, oh my gosh, do it. But when I read my policy, there's some stuff I'm never going to understand it.
Right.
Again, back to the relationship thing. I count on you to be looking out for me. This one actually is my favorite question. Is there a limit to how many claims I can have on my policy?
Well, technically no, but you're going to pay for it.
Yeah.
So, you would, in all likelihood, we would have to put you in the market of last resort, which is the state pool of North Carolina Joint Underwriters Association. But there is a limit for each carrier. They all have their guidelines for the type of claim, which they're not going to look at the catastrophic claims, which are the hurricane related. As long as it's a named storm, then it's fine. But active got lightning and things like that, they can. But if it's a named storm, the DOI prevents any kind of adverse reaction, I guess. But
DOI, what's DOI?
Department of Insurance.
Okay, Department of Insurance. Gotcha.
But with that said, yes, that's why I like the higher deductibles, honestly, because because it does reduce the amount of claims that people file. Too often I see people come in, they have, we run their CLUE report, and it's like every single tiny little claim: refrigerated property, accidental theft, this. They'll have a laundry of claims, and they don't realize how that affects them.
Right.
And now they can't get the $1,700 rated policy, through a great carrier. They have to go to the Joint Underwriters Association, which is $3,200 because they just filed frivolous claim.
So you kind of have to do the math. Am I gonna
Is this worth it?
in this claim, after I pay my deductible, I'm gonna get $2,000 back, which is great because I need it to make up for whatever loss I have. But that $2,000 is gonna come from somewhere,
Right.
and it's gonna come from future payments.
Right, and over the next 3 to 5 years.
Yeah.
So I tend to look at insurance like it's more for catastrophic reasons. If something is going to be devastating, then I'm going to file a claim. But if it's for the $2,000 claim, I'm not going to, have that on my report where I have to pay for it for the next.
Well, it's
years.
not what it's designed for. It's not designed for the little stuff. It's really designed for the things that can run you out of your house, harm your family, and you're unable to occupy or be in it. I don't think I have any other questions. Anything you can think of you want to share with us, April Jones?
Well, first, thank you for asking us. So it's
Always.
always nice to kind of come and chat insurance.
Yeah.
It's not the most exciting topic, but
It's important. I mean, this is adulting,
yeah.
right?
Yeah.
Well, nobody wants to adult, but it pays to adult.
Exactly. But
Yeah.
we're opening an office in Hampstead. We're super excited about that.
Oh, yeah. You were
so
telling me
2
about
locations.
that. Looks like it's going to be ready in September 2021.
Mm-hmm.
And your location in Wilmington, where's that?
It's 5016 Oleander Drive, so it's almost towards the park.
Okay, and you guys have a website
Yes, apriljonesinsurance.com.
and Facebook?
Yes, April Jones Insurance. I don't know the exact
Oh, that
name.
sounds familiar, that, April Jones.
I'm pretty sure you could just Google that. There's
and
not
then,
many names.
And then Insta, all right.
Right, yes.
And of course, we can see her out in the neighborhood serving the community.
And YouTube. We have
Yeah.
YouTube.
Oh,
so,
YouTube.
Yeah, we're still
Excellent.
pumping that one up. But,
All right, cool. Any questions for me?
No, ma'am, but thank you.
All right,
Yeah,
thanks. I
awesome.
appreciate it.
All right,
Have a great
talk to you
day,
soon. You
April
too.
Jones. Thanks for spending time with us.